Hi, this is Linda Smith, Executive Editor of Top Producer, and I have with me Jim Bauer of Bauer Trading in Chicago. We're going to talk about what the election means to commodities. Jim, what is your top-of-mind take-home for our producer readers regarding this election?
Linda, I think the first thing is that everybody must recognize that the process is still ongoing as far as the selection of our leadership. Granted, we've got the main core in position now, but we still have a lot of appointments and new people that will be coming into leadership positions that are in this particular market are extraordinarily important. And I think the two most important positions that are going to be coming up here for a lot of oversight and a lot of scrutiny will first be who he appoints, President-elect Obama appoints as head of the Treasury, because obviously we still have many, many problems there. And they're not only problems that stem from the United States, but probably more importantly, what's going on in the global market. I was looking at a report this morning that some of the banks in Europe and the Eurozone are actually 5 times more exposed to the emerging market problems and malaise than we have here in the United States with our banks. So that situation is ongoing. So I think his appointment or appointments into the Treasury Department are going to be extremely important to find some stability here, because stability is a big word in the marketplace. So that's the first appointment I think they're going to really scrutinize very carefully. Secondly, obviously, what has happened the past year with this spectacular run-up in energy prices, then a spectacular fall, and now a little bit of a recovery here, we know that it's almost a constant battle, almost hour by hour, just where we stand with our energy supplies and energy policy, both short, intermediate, and long term. So I think who he appoints as the new Secretary of Energy is extremely important to the stability of the markets, is extremely important to the associated price of commodities to the oil price. I think in general, the most important aspect of the market here over the next, let's say, months to 2-3 months, and I think I'm speaking from experience on this over many, many years of trading, I really think it's very important that the market come into a healing process. And a healing process obviously is very similar to like a wound or an injury. For example, if they have a sprained ankle, it can normally heal up in 2 or 3 weeks if you take care of it and put ice on it and so forth. But if you've got a tear in your Achilles tendon, which is basically in the same area, it can take as much as months to years to heal that. And I think we have an Achilles tear right now in these global markets, so I do not think it can heal itself up overnight or in weeks or even months. I think it's going to take an extended period of time in order to heal it and heal it correctly. The worst thing to happen to commodities right now, in my opinion, is for the price to go shooting straight back up, let's say towards the highs, because that would definitely kill the demand that's trying to resurface at the present time. And demand in this type of market structure is actually more important than supply, because demand is a longer-term factor. So I think the market probably from a grain standpoint and agricultural standpoint probably has seen a kind of a technical bottom that we can use as a reference point, has kind of rallied back up, but I think what we'll go into is more of a tubular type market in which the market rolls up to its high point of the trading range, then falls back down. Then it sits there for a while, then rolls back up, then falls back down. And that it can go over an extended period of time, but that's actually good for the marketplace short to intermediate term.
What do you see as the trading range for corn, soybeans, and wheat in that?
Well, I think November beans have a significant amount of resistance up around that 990 mark. And, of course, at the lower end, at the extremity, let's call it 830. So that's about a $1.60 trading range. And that sounds wide, but in the context of what has happened in the soybean market, that really is probably closer to being a true trading range than most people would think. The more difficult one to me is the corn market, because we still have about 40 to 45% of the corn harvest to go, And of course, we have this November 10th crop report coming up, and there's a lot of concern about what the USDA is going to project forth, particularly in that corn yield. So it seems to me December corn has reasonably good support down around the 382 mark, but when it gets up around that 423 mark, it seems to run into resistance. And of course, if you could break through 423, the next level would be 450. On the wheat market, obviously wheat on the Chicago December contract has got a pretty amount of significant resistance up around $6. And again, there seems to be support down in that 525 to 530 range. But wheat is a very global market. I saw this morning that Australia has, or a berry in Australia has dropped down their crop down to around 19.9 million metric tons. So they've dropped that crop down. But overall, we're still up about 7 million metric tons over what they thought just about a month ago on that global supply. So the wheat market still has some structural problems with it. And I think most technicians would agree that that probably sold into on rallies.
All righty. One more question about the election. Do you think that the outcome of this election is going to create a feeling of optimism among consumers, and will that affect the markets in terms of their demand?
I think the consumer pretty much voted their choice. Again, I go back to this kind of simple phrase that I use all the time, but the market is a very sophisticated place, and I think the market, and in parentheses, that would be people expressing their opinion via their investments, big and small, will always correct the imbalances, the overvaluation, the overtrading, the manipulation, the fraud, and the non-transparency. So I think that people have voted their displeasure with what has gone on in Washington particularly the last several years. And I think this energy situation, when it got pretty much out of hand, I think that really was very, very worrisome, very, very abrasive to a lot of people. And I think there's an element of basically total distrust of the leadership that were making those decisions on those policies. That's why I mentioned to you earlier, I think who he appoints as the new Treasury head and the new energy head is going to be extremely important to consumer confidence.